another Thank God Friday to the start of the weekend, everyone. I am Melissa Enoch here at the NGX trading floor in Lagos.
And I'm Grace Agbarago. It's the last day in the month of July. We thank you for joining us at this time on the show.
All right, let's tee off with news now. As usual, MTN Nigeria reported a 25.9% year-on-year increase in second quarter profit after tax to 352.04 billion naira, driven by double-digit revenue growth, stronger operating margins, and lower finance costs. Revenue rose 13.3% together with a 291 basis point expansion in EBITDA margin to 56.5%, supported mainly by a 24.9% increase in data revenue as data subscribers grew to 55.7 million and smartphone penetration reached 66.4%. The telecoms operator declared a record interim dividend of 26 naira per share, while profit before tax rose 30.4% to 554.17 billion naira, helped by lower finance costs and a sharp improvement in foreign exchange gains. Meanwhile, at the 7th African Emerging Markets Forum, World Bank's Indemit Gill highlighted the role of urbanization in driving economic growth and job creation across sub-Saharan Africa. He said African cities must be better planned and supported with the right infrastructure, skills, and investment to turn rapid urban growth into a source of productivity and opportunity. Let's now listen.
We looked at per capita income of sub-Saharan African countries, or African countries generally. We separated the big 5 economies from the smaller 43 economies. There is no increase in the per capita income of African economies on average since 2010. Zero, okay? So you say, all right, so everybody keeps saying, you know, the global economic order, the previous global economic order was so good, okay? So there are 2 observations I have with that. The first one was until 3 years ago, everybody was cursing the global economic order, okay? Then Trump came and everybody said, we love that global economic order. Well, get with it. It's one or the other, okay? I say it is the other. I say good riddance to the old global economic order. The old global economic order was really benefiting Europe very much. But if it was benefiting Africa, then why have African per capita incomes not increased in the last 15 years? Okay? So I would say, come up with a better economic order that next time round, 15 years from now, you see your per capita incomes have quadrupled because they should be doubling every 7 years or at least every 10 years.
Every 10 years.
Every 10 years. Okay? So that's the reason I say is that don't go away with this thing saying, oh, terrible, the global economic order has changed and so on. Create a new one. Now you have more than 50% of world GDP is in emerging markets. It's not in the rich countries. Okay? So you now have the chance to do it. But I still sense a lot of passivity. And I think it's because emerging markets have not yet learned to identify the things that they have in common, interests that they have in common, and coalesce around.
In the meantime, Africa Trade and Distribution Company, a subsidiary of Afreximbank, has signed agreements to launch national trading platforms in Zimbabwe and Malawi, expanding its network to strengthen intra-African trade and regional value chains. The new joint ventures will focus on commodity aggregation, warehousing, logistics, trade finance, market intelligence, and support for small businesses, aiming to improve market access, attract investment, and boost exports. The launch follows the establishment of ATDC Egypt earlier this year, with Afreximbank targeting 7 national ATDC platforms across Africa by the end of 2026 to expand trade and distribution infrastructure. In other news, Leseja Hayango has addressed the 106th Annual Ordinary General Meeting of the South African Reserve Bank, outlining the bank's priorities for maintaining price stability, financial resilience, and sustainable economic growth. The governor also highlighted the importance of sound monetary policy, institutional credibility, and adapting to an evolving global economic environment. Here are some excerpts.
Since our previous annual ordinary general meeting,
We have taken a big step to do that better. After 25 years, our inflation target has finally been reformed. We used to target a range of 3 to 6%. From 2017, we explicitly aimed at the 4.5% midpoint of that band. In 2025, South Africa formally adopted a 3% target plus or minus 1 percentage point. This new target is in line with the inflation rate of our peer countries as well as major economies. It will also deliver rent users an experience much closer to price stability. We have just been hit by a big oil shock, which pushed headline inflation to 4.5% in May and 5% in June. Everyone feels the pain of rising prices, and everyone is worried about inflation being too high, including us. But until very recently, 4.5% was our inflation goal, and we were satisfied when we got there. In the last decade, we have often tolerated inflation at 6%. We now see clearly that those rates were too high. Last year, we made a choice to have lower inflation. Yes, we have now been hit by a shock that was completely exogenous and has nothing to do with our choices. But shocks will happen. For the SARB, our job is to ensure inflation reverts to target. Monetary policy does not control the prices of individual goods and services, but we do have a lot of influence over the longer run buying power of the rand across a broad purchase basket, and we intend to protect that.
Finally, on News Now this Friday, the International Monetary Fund, IMF, has completed the 7th review of Egypt's Extended Fund Facility Program and the 2nd review of its Resilience and Sustainability Facility, unlocking immediate disbursements of about $1.77 billion. The approval enables Egypt to access about $1.5 billion under the Extended Fund Facility and $272 million under the Resilience and Sustainability Facility, bringing total IMF disbursements under both programs to about $7.3 billion. The IMF said Egypt's economy has remained resilient despite the Middle East conflict, with real GDP growth reaching 5% in the third quarter of full year 2025/2026, while full year growth is expected to reach about 4.6%, supported by exchange rate flexibility, energy price reforms, and fiscal discipline. I am Melissa Enoch, and that's it on News Now this Friday. The show returns shortly after the break with Grace giving us our market updates.
Retain the monetary policy rate at 26.5%. 2, retain the standing facilities corridor around the MPR at plus 50 to minus 450 basis points. 3, retain the cash reserve requirement, CRR, for deposit money banks at 45%, merchant banks at 16%, and non-TSA public sector deposits at 75%. The committee's decision to to maintain the current policy stance followed a thorough assessment of the balance of risks. Although the headline inflation moderated marginally in June 2026, global uncertainties have heightened due mainly to the renewed hostilities in the Middle East. In view of the evolving developments, maintaining a cautious monetary policy stance remains appropriate.
Welcome back to Money Moves. Thanks for staying with us. Let's now go over to Grace for reports on how the markets closed this Friday. Hello there again, Grace.
Thank you, Melissa. Let's now take a look at how the markets rounded up trading for this month. Beginning with the equities, the NGX All-Share Index closed on the negative, down 0.03%, while the BROVM in Abidjan gained 0.65% to 484.61. The Nairobi Securities Exchange rose 0.50% to 237.86. In Southern Africa, the Johannesburg Stock Exchange fell 0.57%, while Mauritius Semdex edged up 0.04%. In North Africa, Morocco's MASI was flat at 17,739.11 as at 14:17 GMT. Finally, let's take a look at the energy commodities. Brent crude rose 1.12% to $90.03, while US WTI gained 1.77% to $85.07. Natural gas slipped 0.07% to $2.75, while Arabic gasoline declined 1.15% to $3.24 as at 12:52 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those reports on how the markets wrapped up trading today. And that's it on today's edition of Money Moves. From all of us here at the NGX trading floor in Lagos, we say thank you very much for watching and do have a splendid weekend, everyone.